There's a lot of experts out there right now, and they're saying that we're not in a real estate bubble. Well, I have a surprise for you. I think that we are. I'm Tony, and this is Real Estate Investing and Landlord News. All right, so I have a couple of interesting articles for you today. But before we get started, go ahead, hit that subscribe button and hit the like button, and I'll keep bringing you great articles about real estate investing, about landlording, about the eviction moratoriums, and everything else that's going on right now. So the first article I have for you today, it's coming from 12news.com, and it says, Boomer Bubble. How long will Phoenix's hot real estate market last? And the reason I'm bringing this article right now is because prices have skyrocketed all over the country. And even though this article is specific to Phoenix, it really does tell a tale about what's going on everywhere, okay? The Phoenix market is super duper hot. I know because I just sold my fourplex in Phoenix and I made more than double what I paid for it. And I mean, it's absolutely insane. And prices have only risen since December when I sold my fourplex. So, you know, when you think about it, it's like, well, how far is this going to go? Is there anything that can slow down these real estate prices going up? And, you know, my only thought is that, yeah, there is one thing that can slow down these prices. And I'm going to get into it after I read these articles to you, okay? Okay, and if you're wondering why my location has changed, the truth is that I am in my rental house here in Benson neighborhood of Omaha, Nebraska. And I was doing a little bit of work today, so I wanted to just go ahead and try to make a video in a different location than my basement like I normally do. So I'm in one of my vacant rental houses right now. So let's get into this article. With home prices going through the roof right now, it's hard not to get flashbacks of what happened in 2008 when the housing market crashed after years of a housing boom. It was one of the worst times in U.S. financial history, and many are concerned it could happen again. Back then, too many people had taken on loans they couldn't afford, and banks were willing to provide them. Now, for everyone who is too young to remember, you know, things were crazy back then. I mean, I worked at Walmart back then, and I got approved for a loan for $150,000, and I was making $20,000 a year. I mean, I couldn't have paid that mortgage if I had wanted to, but here I got approved for the loan. Fortunately, I was smart enough to realize that I could not afford a property, and I didn't buy one. So I didn't end up, you know, having to face the consequences of over leveraging myself. But I did learn an important lesson, and now going into it in the present day, I'm still watching out for, you know, booms and busts. And that's exactly what I think is going on right now. They didn't have to put any of their own money in, said Tina Tamboer, who is the senior housing analyst for the Cromford Report. A lot of 100% financing, adjustable rate mortgages, interest-only payments, all kinds of loan programs that were going on that spurred demand, but the demand was from people who had no intention of living in the home. There were also too many homes being built and not enough buyers, driving prices down. Homes sat vacantly. Yeah, it was an insane time. And I will just say that, you know, I fortunately didn't participate, but I know a lot of people who somehow were able to get out of the market before everything came crashing down, and they made a lot of money. But you have to really, really think about what you're doing right now. And if we're going through another cycle like that, you know, I don't think that the boom that we're going through right now is like that, but I do still see it busting. And you know, there are things that can bust it. Even with high demand and low supply, there are things that can bust this market right back down and, you know, crash and just ruin everybody, rain on everyone's parade. This time, it's the opposite. There aren't enough homes for increasing demand. Buyers are willing to pay cash on top of tens of thousands of dollars above the asking price. Mark Stapp, director of the real estate program at ASU's W.P. Carey School of Business, doesn't believe what we're experiencing is a bubble. A bubble implies that when it bursts, there's nothing there, right? When you think of a bubble, it's got outside, and when it pops, it's all gone, and there's nothing there. That's not what this is. This is based on real economic expansion that was based upon a purely speculative. Add to that, people working from home because of the pandemic, a lumber shortage, big companies relocating to the valley, affluent movers, millennials buying homes, and low interest rates. It's all creating the perfect storm for pushing prices up. Now, those are all very interesting facts, right? But here is the reason that I believe that the bubble is going to burst, okay? Now, you and I both know that the only reason that interest rates are low right now is because the Federal Reserve is keeping them low. But it's causing huge issues with inflation. And my personal belief is that the Federal Reserve is going to look at the amount of inflation going on and they are going to panic, okay? They're going to freak out. And what they're going to do is they're going to do what nobody really expects them to do. They're going to raise interest rates. And they're going to keep raising them until they can slow inflation down, okay? And that's how the bubble will burst. They raise interest rates and it'll make it harder for people to buy homes, okay? And when it's harder for people to buy homes, then less people will be buying. Less people will be buying, which means the demand will drop, okay? The demand drops, all these people out there charging these huge amounts for these homes, and they're just going to be like not able to get that amount of money, okay? It will burst. The bubble will burst at that point. So my belief is the Federal Reserve is going to raise interest rates. I don't know when this is going to happen. I mean, I don't know how long super high inflation has to last, but I do believe that that's exactly what is going to happen. Okay, the second article I have for you today comes from money.com, and it says, "When will the housing market crash? Experts weigh in." Now, from what I've seen from most of the experts, they don't believe that the market will crash. And I don't know if it's going to be a hard crash or if it's going to be a slow, steady decline. But I do believe that prices are going to go down due to raising interest rates by the Federal Reserve. So let's get into this article and see what it says. Ask anyone who's tried to purchase a home in the last few months, and they'll tell you horror stories about record high prices and bidding wars that either leave them empty-handed or paying well above asking price. With a housing market that's been red hot for close to a year now, people are beginning to wonder how long the frenzy can last. The number of Google searches asking, "When is the housing market going to crash?" increased by 2,450% between March and April. And that's probably why I'm making this video right now. People are looking for more information about this, and I believe that I have a different viewpoint than most of the people out there. Homeowners today remember well the way home prices rose and rose in the early 2000s, only to crash spectacularly in 2007 and 2008, bringing the rest of the economy down with them. But do rising home prices necessarily mean a bubble? And does a housing bubble necessarily have to end in a crash? We are no doubt in a housing boom and perhaps teetering on the edge of a bubble, says Ali Wolf, chief economist at housing consultancy Zonda. But there could also be an argument made that today's pricing is justified given the fundamentals. Well, I do believe that the pricing is justified for the fundamentals that are in place right now. But I don't believe that those fundamentals are set in stone, okay? I believe that there's going to be, keep in mind that developers, when they're building properties, they lag behind the data. So it could take them months or even years to get developments built, right? And by then, if the Federal Reserve has risen interest rates, then the demand for housing would have gone way down. So they might have built all this new housing, the demand of housing might have completely dropped, and the whole market could just, face a big decline. Even though prices are rising, today's housing market looks very different than it did in 2006. Back then, price gains were driven in large part by speculation. An oversupply of homes and loose lending practices made it easy to get into home ownership. When prices inevitably dropped, many borrowers were stuck with houses they couldn't actually afford and ended up in foreclosure, leading to further price declines. This time, demand is being fueled by historically low interest rates, but it's also being driven by demographics and lifestyle changes brought on by the pandemic. That demand, coupled with record low inventory, is causing the rise in home prices. So yeah, the pandemic is coming to an end, okay, at least here in the United States. So what we're going to see is people are going to get back to their normal routines. People are going to move back to those, small apartments in the city. They're not going to need these houses everywhere. So the changes that were brought on by the pandemic and people wanting more personal space and trying to escape the city, they're going to, basically return to the way things were before. Then, like I said a little bit earlier, I do believe that interest rates are going to rise. Okay, interest rates are going to rise, the supply of homes is going to increase, and that means that prices are going to come down. Okay, and I can't predict when this is going to happen, but I do believe it will happen. In order to know for sure that the housing market is in a bubble, the bubble needs to pop. And for there to be a dramatic drop in home prices, something would need to trigger the housing market to drastically change course. While mortgage rates are expected to increase throughout the remainder of the year, most experts are forecasting a slow rise. Even then, interest rates are expected to stay near historic lows. Without a quick rate shock, the worst thing that would happen, notes Noah Rosenblatt, co-founder of real estate analytics firm Urban Digs, is that the housing market would gradually cool down. First, the bids drop, and then at a lag, the sellers adapt and lower their prices, he says. And see, they mentioned right there, without a quick rise in interest rates, it would just be a gradual decline. My thing is, though, I believe there will be a quick rise if hyperinflation is happening the way that a lot of people are saying it's happening. So, we could be in for a heck of a shock when, interest rates jump up by 1%, and then a quarter later, another percent, and then a quarter later, another percent. And they would still be relatively low, but those huge jumps would just throw everything off, okay? So we'll see what happens. I hope I'm wrong, honestly. I hope that, interest rates don't rise. But if they don't rise, we're going to be dealing with huge, huge amounts of inflation.